What's up, guys? Do you have any idea how much money a single company can rake in over just one quarter? $43 billion in net income. To put that into perspective, J.P. Morgan Chase, the biggest bank on Wall Street, hustles for an entire year to make roughly that same amount. Nvidia just matched it in 3 months. And that's not even the craziest part. During tonight's earnings call, there was a massive plot twist that you probably didn't see coming. Jensen Huang dropped a line that I had to rewind and listen to several times. He said, "Compute equals revenues." What does that actually mean? He's flat out telling you, buying GPUs right now isn't spending money. It's literally printing it. When you see those headlines about people dating AI, what's your first reaction? Do you think it's ridiculous? Or do you kinda get what they're doing? Right now, on apps like Character.ai, users can create or role-play with any character. It could be your cyber therapist or your ideal partner. These types of apps have crossed 200 million monthly active users globally, and the average user is spending over 2 hours a day on them. 100 million people, 2 hours a day. What are they doing? Venting, seeking comfort, or asking an AI, "Do you still like me?" People are finding deeper connections in code than in the real world. You can call it cyberpunk, but here's the reality you need to see. Every single heartbeat, every conversation, every reply from those 200 million people is burning compute. Behind these apps are servers sitting in data centers, packed to the brim with GPUs, and almost all of those GPUs have the Nvidia logo slapped on them. Your emotional roller coasters are printing cold, hard cash for Nvidia every single day. It doesn't stop there. Those hyper-targeted Reels Instagram pushes to you, the smart customer service bots you deal with on Amazon or WhatsApp. It's all powered by compute. And at the end of the day, all roads lead back to Nvidia. A 2024 Stanford University survey found that over 30% of Americans aged 18 to 35 admitted to using AI to write their opening lines on dating apps like Tinder or Bumble. Why? Because using AI to flirt actually works better. The logic behind this is honestly kind of terrifying. We are taking our most primal hormones and emotional impulses and turning them into behaviors that can be optimized by algorithms. Now, think back to Jensen's quote, "Compute equals revenues." He's not just talking about big tech's compute. He's talking about the desires and emotions of billions of people worldwide being converted into compute consumption. And Nvidia is the only one sitting at the toll booth. The earnings breakdown, the ultimate money printer. Let's look at the freshly dropped Q4 FY 2026 numbers. Total revenue, $68.1 billion, easily beating Wall Street's $65.9 billion estimate. For context, the former Silicon Valley king, Intel, pulled in around $13 billion for the whole quarter. Nvidia just outperformed them by $55 billion data center revenue, $62.3 billion. Up 75% year over year. Keep in mind, this is growth over a single quarter. Free cash flow hit $97 billion for the full year. To put that in perspective, a cash cow like Apple generates just north of $100 billion a year. Nvidia is breathing right down Apple's neck. Net income, $43 billion, nearly doubling last year's $22.1 billion. Gross margin holding strong at 75.2%. That's a profit margin that would make even a premium hardware maker like Apple jealous. TL. DR. An absolute blowout across the board. They just keep crushing expectations. Why big tech can't stop spending? During the Q&A, a Wall Street analyst asked a super pointed question. Your mega clients, Google, Amazon, Meta, and Microsoft, are dumping 700 billion into data centers this year. But there has to be a ceiling to their capex, right? What happens to Nvidia when they stop buying? Jensen paused and delivered an absolute masterclass of an answer. He essentially said, "You don't understand the rules of the new world. In the past, software ran on servers, and servers were a cost center for companies. Today, AI runs on GPUs, and every single token generated equals actual revenue. Think of it like opening a Walmart. Traditionally, shelves are an expense. If the EET, stuff on them, doesn't sell, you lose money. But the new logic is, your shelves automatically print money. Every time you add a new shelf, you create a new stream of income. As long as the ROI is positive, are you going to stop adding shelves? Absolutely not. Because stopping means handing over your market share to your competitors. The only dark cloud, a $4.5 billion surprise write-down. Of course, the report did have some bad news that made Wall Street flinch. The CFO mentioned a $4.5 billion inventory write-down. What's the deal here? It's all about a chip called the H20. This is a nerfed GPU custom-built by Nvidia to comply with the Department of Commerce's export controls to China. But with Washington tightening restrictions recently, Nvidia is stuck with a stockpile of H20s and isn't sure if they can even sell them. Under GAAP, they had to eat a $4.5 billion hit straight to their gross margins. Jensen made it a point to emphasize, "We are not assuming any data center compute revenue from China in our Q1 outlook of $78 billion. This means, even if the Chinese market goes to absolute zero, Nvidia can still brute force its way to a $78 billion quarter. But it also implies that this massive piece of the pie isn't even priced in right now. And here is a massive potential catalyst. If Trump's visit to Beijing next month, April, manages to cool down the tech trade war, that zero revenue expectation instantly turns into a multi-billion-dollar surprise. Wall Street hasn't even begun to price in this potential upside. The DeepSeek threat and Nvidia's Moat. A lot of people are asking, with models like DeepSeek performing so well, supposedly without even using top-tier American chips, does that mean we won't need Nvidia in the future? Are we looking at a repeat of the 1999 Cisco.com bubble? Jensen tackled this head-on. He pointed straight to Nvidia's true moat, the CUDA ecosystem. What is CUDA? Think of it as the native language for hundreds of thousands of AI engineers. The top AI companies in the world, Meta, OpenAI, Anthropic, Google, all build their models using code based on CUDA. Swapping out Nvidia's chips right now is like breaking up with a partner you've been with for 5 years who knows you inside and out. They know your habits, your passwords, your vulnerabilities. Switching to someone else means you have to tear down 5 years of habits and start completely over. It's not just a hardware cost, it's an astronomically high migration and time cost. That's exactly why, even though Google has its TPUs and Amazon has Trainium, when it comes down to the most critical training tasks, everyone still has to bite the bullet and buy Nvidia.